They're meeting this week, and they're going to tell us in 2 days what they're going to do with interest rates. Well, let's scroll down this. This is a CME Fed Watch Tool. I'm going to basically tell you what they're going to do. But the interesting thing is they're also going to come out with a new dot plot. I'm going to explain this to you and how this will affect the future of interest rates, hopefully. So let's get over to it. The CME Fed Watch Tool, this is what's happening. Well, this is what's going to happen at the next meeting. Let's go to the probabilities. We're going to go right through here. The federal funds rate right now is 4.25 to 4.5, folks, right there at the top. This is the June 18th meeting, so there's a 99.99999% chance they're going to do nothing at this week's meeting. Now, that's when things start to change, and this also changed just the other day. This one read about 58, 59%. Now we're back at 80% chance Federal Reserve is not going to do anything at the July meeting either. Well, that's going to be actually given to us today, hopefully by what they call the dot plot. What is it? Let's get over to it. The dot plot is basically this thing right through here. So the Federal Reserve, 4 times a year when they meet more often than that, but 4 times when they come out and they'll give us what's called the dot plot. And here's what it is. So right now, this is, if you look at the right-hand side of the chart, it's giving us what the interest rate is. Okay, so the interest rate right now is 4.25 to 4.5, right between this range here. So we scroll over and that right through here. Okay, so in 2025, the dot plot's telling us that 4 members of the Federal Reserve wanted to keep rates right there. And this was at the last, they did this about 2-3 meetings ago. So now what we're hoping or expecting is these numbers or these dots to start moving. Where are they going to move to? But just want to go explain it to you. 4 of the members at the last time they met and did the dot plot expected the rates would do nothing. They would stay right where they are at 4.25 to 4.5. Okay, then you had 4 members saying that they're going to drop 0.25%, and that's right through here. The majority of the members are saying in 2025, the federal funds rate should be right through here, 3.75 to 4. So that means there's about 50 basis points or 0.5% that's supposed to be pulled out of the system between now and the end of the year. So that's what that chart told us at the last meeting. What's this new one going to tell us? That's what the thing. So now are a lot of the members their dots going to start moving up here to signify to us mortgage rates aren't going to change, or are they going to stay right intact saying, okay, they're still going to drop 50 basis points, but then the question comes is when? So that's what I try to help you do as well with the timing of all this stuff. So that's the biggest piece of the news that we have coming out this week. Because the rest of it, let's look at the economic calendar. Now, some of this stuff is going to fill some voids for us, but we're going to have retail sales coming in tomorrow. That's going to tell us the consumer level, how robust the consumer is, or are they going to really start pulling back? And if they start really pulling back,